Now, more than ever, it's important to have a steady and consistent income. And with stocks going up and down a lot, you can easily get lost in which stocks to buy for high profits. Well, I have the solution for you. Focus on the dividend. And what better way by doing that using monthly dividend paying companies? In this video, I will share 4 of my favorite monthly dividend paying companies. Starting the list with EPR Properties. This REIT focuses on experiential properties such as family entertainment centers, ski resorts and theme parks. They are down about 8% from their year-to-date high, pushing that price to FFO down to 10, which is pretty low for a REIT, and they are considered to be undervalued at this point. The revenue is increasing in the long run, but in the recent years it wasn't a smooth ride. And that's very typical for this type of company. And they are reducing their exposure to theaters and focus more on higher growth markets, which is a smart move, I think. In the recent years, margins have been somewhat stable after the lockdown periods, but most recently margins took a small hit. The reason why I really like EPR Properties consists of 2 reasons. For starters, their dividend yield is currently sitting at 7.1%, which is an insane number. On top of that, they pay monthly dividends. Both should never be the main reason to hold a company, but as a pure dividend income play, this looks pretty good. The growth stats aren't that fantastic, of course, but that's because they cut the dividend in the lockdown periods, which made a lot of sense. After that, they started increasing them again. They also expect that FFO is going to increase 3.5% in 2025 versus 2024, so growth will be back on track. Down the line, I'm really bullish on this REIT, as it is expected that this industry will be growing in the coming years. Next to that, it's a great dividend income play at a great valuation as of right now. I'm currently not owning this REIT, but it is on my list for a very long time, and now that we're entering the buying area, I'm seriously considering buying this REIT. Moving on to number 2 on the list, and probably one of the stocks that is discussed the most on the channel most recently, is Realty Income, the monthly dividend paying company. This stock is down about 10% from their 52-week high. And not too long ago they almost hit that magic $50 mark, the moment where I start saying to buy this company. And right now they are hovering around $58, but I think it's still a great deal. Price to FFO, the best way to value a REIT, is reported at 14, which is considered to be low and suggests that this REIT is undervalued right now. Revenue is increasing at a really high pace due to different acquisitions and mergers. But all that growth comes with one problem, and that's the fact that margins are decreasing. Also driven by all the events happening in the world in the recent years. So definitely keep your eye on this number. Looking at their dividends, it's the same reason as with APR. It's a great dividend income play, yielding at roughly 5.5% and of course the monthly distributions. Realty Income also happens to be a dividend aristocrat. I'm still not sure why Seeking Alpha is not displaying this correctly. Down the line, it's a great company, and over the years Realty Income has been criticized by many people, but they just kept them proving wrong. This is also one of the reasons that Realty Income is the top performer in my portfolio, and one of the bigger REITs. At these prices, I'm definitely adding more shares every now and then. Third stock on the list is Main Street, and it's there for obvious reasons. This company is the golden standard within the BDC sector, so let's see why everyone is buying this stock. Well, Main Street is down about 15% from their 52-week high, and this company is known for being at a premium price. NAV per share is reported at $32, which is indicating they are overvalued, but hear me out. This stock has a phenomenal run over the past 5 years, And that's because they are one of the only few BDCs actually that grow their NAV, as most BDC report almost no growth and focus on the payouts. Main Street is focusing on growing the business and the payouts. And that's also reflected in this graph, where we see the revenue growth over the past years. Their margins are also looking fantastic. They are growing after a big decline during the lockdown periods. Dividend yield is at 8%, which is a great number, and actually the highest in today's list. Payout ratio is looking really good for a BDC, and they even managed to grow that dividend over the recent years. But there's more. Due to the fact that Main Street is a BDC that is focused and forced on payouts a certain amount of the income to the shareholders, you will receive a lot of supplemental dividends that really add up over a longer period of time. Down the line, it's a fantastic company, and it's also a top 3 holding in my portfolio with reason. Every time this company is dipping in stock price, I'm buying shares, simply because it's a fantastic dividend payer. Last stock on the list has to be STAG Industrial, one of the more interesting REITs in my opinion, and I have talked quite a lot about this REIT lately. Currently trading around $32 to $33. They are up a little bit from their recent low, but still down about 20% from their 52-week high. Price to FFO is reported a little over 13, indicating they might be undervalued. The thing that I really like about this company is the fact that revenue is going up really steady and consistent. Nothing crazy, but just great performance overall. Looking at their margins, I get excited too, since the operating margin is going up pretty decently. However, the net margin is struggling a little bit lately, so definitely keep your eye on that number. And looking at their dividend yield, we see that this is actually the lowest number of today with only 4.5%. Still a great number in my opinion, especially since the payout ratio is considered to be relatively low at only 61%. The growth stats are barely visible, but those 12 years really add up in the long run. And overall, I think this is just a steady REIT that has a bright future ahead. Of course, there might be some short terms, ups and downs, but they have been proven to be consistent in the darkest times historically and most recently. Hence why they are a big part of my portfolio. Monthly dividend income is one of the most underrated strategies for building consistency in your portfolio. And these companies make it possible. Whether you're just getting started or already deep into dividend investing, there is something powerful about seeing those payouts hit your account every month. Which is your favorite monthly dividend paying company? Let me know in the comments down below. And remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.